So how my mental model for these ETFs is we got crypto land and fiat world, and this is just a trade deal between the two. So hot money flows. If you think of VC as FDI and you think of this as hot money flows, it's just a trade deal. For me, it's like this is as big a deal to me as China opening up after the WTO agreement, because we've got now a free trade agreement essentially between them. Well,
I think there's going to be a Bitcoin ETF, an Ethereum ETF, a Solana ETF. Regardless of what any politician says, the banks know this is their way to stave off the effects of being forced to buy these bonds that are bad deals for them.
It's been almost 3 months since the U.S. Securities and Exchange Commission approved 11 spot Bitcoin exchange-traded funds, a historic feat that many thought would be impossible for many more years to come. While the GBTC outflows continue, the 10 new ETFs also continue to accumulate more Bitcoin for their respective funds. As of Wednesday, April 3rd, BlackRock's IBIT had accumulated 257,319.61 Bitcoin, valued at $16.9 billion. It's the second largest holder after GBTC, and the first of the new 10. Fidelity's FBTC follows with 146,016.20 Bitcoin, currently valued at $9.72 billion, while ARK Invest's ARKAB holds about 43,338 Bitcoin, and Bitwise's BITB has accumulated 32,105.38 Bitcoin. The other 5, and the new entrant, Hashtag Spot Bitcoin ETF, hold another combined 28,792 Bitcoin, bringing the Bitcoin holdings of all new spot Bitcoin ETFs, excluding GBTC, to a combined 507,472.89 Bitcoin, valued at over $33 billion. With GBTC, all spot Bitcoin ETFs hold a combined 835,485.71 Bitcoin, which is about 4.24% of the total Bitcoin in circulation. Despite the recent reduction in inflows for the new ETFs and the ongoing GBTC purge, which has had a dampening effect on Bitcoin prices, the approval and launch of these ETFs is still the most historic in history. So, historic BlackRock CEO Larry Fink describes it as the most successful launch in ETF history. During a recent interview with Fox Business, Fink said, "IBIT is the fastest growing ETF in the history of ETFs. Nothing has gained assets as fast as IBIT in the history of ETFs." For Real Vision CEO Raoul, the spot Bitcoin ETFs are merging TradFi and crypto land, bringing unprecedented opportunities for both worlds. While traditional investors get to diversify their portfolios by investing in this new asset, cryptocurrency investors get to enjoy exciting price gains caused by the frenzied demand for these products. Even issuers like BlackRock and custodians like JP Morgan get to enjoy a massive share of the pie. This is why BitMEX founder and former CEO Arthur Hayes believes the SEC will approve several other crypto-based ETFs despite the agency's apparent reluctance to do so. Pal and Arthur recently had a discussion about spot Bitcoin ETFs and how they contribute to the development of the digital assets space. As we bring you clips from the video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Crypto life raft. The regulators are kind of struggling still with letting it happen. They want to throttle it. How are you seeing the big picture play out of the regulation, the adoption, and how governments allow it to happen and that kind of phasing?
So there was a paper written by this guy at Columbia, Colomaris, I can't pronounce his name. And it was about fiscal dominance. Basically, the federal government has issued so much debt, the spending is so high versus the tax receipts that any sort of notion of independent central banking goes out the window, and the central bank becomes a tool of the federal government to pay the bills, right? And if you think about what the problem is for the banking system is, okay, we know all this inflation is coming. We know that we're going to be forced to buy these bonds, and we know that's going to ding our profitability. But there's this escape raft, called crypto. And if people really latch onto this and they say, hey, why do I have these dollars, euros, yen, yuan, whatever? Let me go buy an asset that's outside of this whole system, and then I'll just sit back and watch the fireworks. That's not good for the banks. They're not going to make any money on that. So, what do they do starting in 2023? All of a sudden, the Winkle clowns, they try to get an ETF approved for 10 years. Did the Lord's work for 10 years trying to get this ETF approved in the US. Still don't have one, by the way. And Larry Fink, within 6 months, gets an ETF. And so TradFi says, okay, this crypto thing works. There's obviously this zeitgeist of too much federal spending. I mean, Jamie Dimon rages on about it every quarterly report. Oh, yeah, the U.S. is spending too money. U.S. is spending too much money. Well, instead of them getting by them being forced to buy bonds that are negative real yielding, well, let's have a product that we can throw our clients into and make fees that's still within the system. And that's why I think these ETFs are now being embraced, which is, hey, here's this crypto derivative. You don't actually get to use Bitcoin because you can't withdraw it. You can't even redeem it. You want to redeem, you get dollars back in these ETFs, not Bitcoin. And so it's just a way to put all these people who want to get into this crypto life raft, but don't want to put in the real work and deal with private keys and, OPSEC and all the things. I mean, it's annoying, but again, freedom isn't free. And here's this ETF. You can subscribe to it through your retirement account, your pension fund. You can buy it on a stock exchange. You've got all these, respectable looking folks selling this to you now, saying this is a way to diversify against inflation. And the banking system reaps fees. And we've seen how successful it's become. So I think there's going to be a Bitcoin ETF, an Ethereum ETF, a Solana ETF. Regardless of what any politician says, the banks know that this is their way to stave off the effects of being forced to buy these bonds that are bad deals for them.
And also, the government quite likes it because the money's actually not leaving the system. It's not you and I, opening, having our ledger and taking our money outside of the system, which is, why, when I saw the European mess back in 2012, that's what got me into Bitcoin, because I just wanted to be outside the system. But these people aren't. So they're just kind of renting the performance of it without leaving the system. And that's a nice way for the government to say, well, guys, you play in this, but it's going to stop them opening the Coinbase account, at least starting the journey.
And it's better to do it this way than to ban something. Because when you ban something, then people are like, oh, well, why are you banning it? Maybe I want to have some of it. Look at the illegal narcotics trade around the world. You tell people they can't have something, they say, no, I'm going to have it. For some people, their crypto thing, they want to take their fiat, trade crypto, and earn more fiat, which again is fine. It's a choice that people get to make. But if you want to take your fiat and save it in something that's outside of the system, then you have to go and buy physical Bitcoin and deal with what the issues that come with owning physical Bitcoin.
According to people familiar with the issue, the SEC is still resolute in its decision to bring Ethereum under its purview by declaring it a security. The agency is reportedly investigating the Ethereum Foundation and issuing subpoenas to firms that have dealt with the foundation to force them to submit confidential documents the agency believes could be incriminating. Regardless, BlackRock's Larry Fink believes Ethereum-based spot ETF can still be approved, even if the crypto asset is declared a security. When asked if his asset management firm could still list an ETF that holds ETH if the crypto is considered a security, he said, "I think so." According to SEC filings, 8 potential issuers, including BlackRock, have submitted applications to the agency to bring a spot Ether ETF to the market. The SEC is expected to make a final decision next month, but industry experts are less optimistic that the application will get approved due to Gary Gensler's obvious left-leaning political affiliation. Some experts believe no tangible headway will be made until after the elections in November, especially if there is a regime change. It'll be Wall Street versus the SEC, Larry Fink versus Gary Gensler, and Elizabeth Warren battle. Who do you think wins? Let us know your thoughts in the comments section as we bring you more clips from Pal and Arthur's discussion.
So how my mental model for these ETFs is, we got crypto land and fiat world, and this is just a trade deal between the two. So hot money flows. If you think of VC as FDI and you think of this as hot money flows, it's just a trade deal. For me, it's like, this is as big a deal to me as China opening up after the WTO agreement, because we've got now a free trade agreement essentially between them. Well, relatively free.
Yeah, I guess we'll see. We'll see how free it is, what the price impact is. Are people actually going to hold this stuff? If, we'll markets down, 10-15% over the last 2 days. How is that going to affect the flows? How secular is this trend of cash coming into these ETFs? How much do people actually believe in this, negative correlation thing? And can they actually deal with the volatility? I don't know. We're going to find all this out about this new segment of the market and how they behave when they start seeing the real volatility that's been suppressed in TradFi for the last 40 years. So I think the jury is still out on how big the positive impact will be. I definitely believe that the banks love fees, and this is a fee bonanza. It's an opaque, illiquid market where the end customer, They don't care if they're paying a 2% spread if the thing goes up 30% in a quarter. They could give two. But, the bank trading desk is loving it. BlackRock's just shilling them all sorts of stuff. So I think there'll be as many ETFs as they can get out in this market as quickly as possible just to ramp up AUM and get those fees.
Also, I think they're praying that they're not allowed to give ETH yield, because if they get the ETF out and they keep the yield themselves, I mean, that's a huge bonanza, because they keep the 5% yield.
It'd be great.
And, they're greedy. They will take it. As that money flows into crypto, into our world, into crypto land itself, what does it do to the risk curve? We've already started to see some sort of bananas price action as money starts getting recycled. So let's talk through how the risk curve flows.
Well, it's a wealth effect, right? So you and I hold physical Bitcoin. We're like, oh, wow, we feel real rich. We got all these new people in pushing up the price. What else do we want to own in this space? And then you move to the ETH, and then you go to Solana, and then all of a sudden you're fucking trading Slurf or like dog with hat. It's fun. It's just humans experimenting and playing games with each other that have monetary payouts on the internet. And I think it's a lot of fun. Obviously trade with responsibility and all that kind of stuff, but it's pure emotion. It's no central authority telling you what you can and what you can't do. Whatever someone wants to list, they just do it, and it either succeeds or fails instantly. And I think that's super powerful. And for the first time in a long time, people are having fun doing this thing called trading. And some of it is tasteless memes, but whatever.
But you've been on this whole thing about the memes and the power of memes and what it actually means to crypto for quite a long time. I think you and Meltem have probably been really early in identifying that this is a real thing, and it's tokenized culture. And some of it might be fleeting, like Slurp might last a day or it may last 10 years. Who knows? I mean, Doge, who the thought Doge would survive? But it's still worth multi-billions of dollars.
Yeah, and the chains that can support this culture are going to be the chains that have value. So Solana, and I'm a bit of an ETH maxi in terms of who has the best decentralized internet computer. But at the end of the day, if the Solana price is going up because people are launching these meme coins on it, and a new developer to this space says, "Oh, this is interesting. I want to develop on Solana because I know I have users." Why does Solana have users? Well, it was a very easy platform, good UI UX to launch these dog money coins, and so it brought attention. So yes, you can poo-poo these things as stupid and valueless, but if it brings attention, if it brings more engineers to the space, then it's positive value for the chain itself.
At just over $67,000, Bitcoin, the world's leading cryptocurrency by market cap, is up by about 1.36% in the past 24 hours. Though the leading cryptocurrency continues to consolidate between $65,000 and $70,000, experts are optimistic that this will be a most rewarding bull market for investors. PAL estimates that Bitcoin will hit at least $200,000 by 2025 if this is a normal cycle, and maybe even higher if the demand from the ETFs continues. Arthur's prediction is more bullish, but based more on macro conditions than crypto fundamentals. He believes worsening macro conditions could send Bitcoin straight to $1 million in 2025, especially if there is a significant bond market crash in the coming months. What are your thoughts on the discussion and PAL's and Arthur's outlook for Bitcoin and the entire crypto market in 2024 and beyond? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.